Since the financial crisis, the stock markets have been entirely dependent on the central bank's words and actions. At the beginning of 2016, this was easily displayed as money poured out into the red. In fact, today we'll look at the largest percentage decline on a first trading day of the year since 1932. You came here for the truth, so let me unveil that for you. Today we'll look at this and explain that this is the financial crisis part 2. This isn't going back to 2008 in this instance, as it has been many times before, as I've shown you. This has gone back to the Great Depression. Let's look at this article right here out of CNBC. The Dow Jones closed 275 points lower. The index closed down 1.58%, its worst start to the year since 2008. That's the closing price right there. And then we go on to look at the fact that at one point it was down 467 points. 2.5%. That makes it the largest percent decline on the first trading day of the year since 1932. And of course, the media will report it like, it's just a bad day, nothing to worry about. What this signals to me, and should to you as well, is that 2016 is not looking pretty. Why? Well, the markets and the big people within the financial industry will say, number one, there is China's slowdown. Number two, we have rising interest rates from the Federal Reserve and grim outlook overall. What I would suggest to you is what I've suggested just recently, and that is look at the shipping numbers. Look at the imports, look at the exports, look at what countries are doing overall, and I assure you it's not doing too well. Let's move on to this article here, out of time. An important one, in fact, one that's overlooked. Rents are going up faster than your paycheck. What I've always said is that rents will go up many times, many cases, when things are doing bad. So that's one thing that actually appreciates in a bad way for you if you're renting, because more people need to rent. They've been selling their homes in many cases, and they have to go out and they have to rent. That means there are less rental properties available. So obviously, supply and demand fundamentals. At the same time, you have some inflation that's taking place in many categories. You also have the declining value of your dollars, making everything go up. The rental prices are rising so much that in 58% of the housing markets in the US this year, it's actually going to be more affordable to buy rather than rent. This is where things get a little troublesome, because we've heard this all before. What happened during the subprime crisis? People were thinking, why rent when it's more affordable? I can just buy a place and I can get the subprime mortgages. I can get a very, very low rate on my mortgage. If I need to get a line of credit, I can get that as well. All available at cheap prices. This is not a good thing, and unfortunately, it's expanding. Look at this, a country which is in deep turmoil at this time, one of many in South America. I covered this one first, and it is Brazil. Brazil's economy will contract more than previously forecast and is heading for the deepest recession since at least 1901. We're going back over 100 years now as economic activity and confidence sink amid political crisis. This happens to be Latin America's largest economy, shrinking 3%. So imagine the GDP in the country that you live in shrinking 3%. You'd have alarm bells ringing around. You would have chaos. And in the markets, of course, if they were to determine that 3% decline. Now, this is all based on the expectations, of course, as I've said before, but just hang in there for a moment as we look to go beyond Brazil, Venezuela. Losing hope as gridlock looms. I'm not going to get into the article right here. What I just wanted to note was that It's a global problem. Venezuela's having issues with their government, with things that have happened. But look at the inflation rates. The last numbers I had seen was 63%, and I'm sure it's gone a lot higher than that. But you have to understand, when things start to happen, it snowballs, and that happens quicker and quicker and quicker until all of a sudden you realize, well, we have a big problem on our hands, and I can't turn around and just immediately change things. Everyone thinks that, when it gets really bad, that's when I'm going to take action. Doesn't work like that. Never has, never will. And then to go back into what I was talking about before about the rent, you have people who are in debt, more debt now than ever before. So what is the solution to that? Of course, to get into more debt. And this is just a silly little article, but just using it to show you this point. This man has 1,500 credit cards and near perfect credit score. And the reason I show you this article is to highlight the silliness of this whole system, that this guy is able to get 1,500 credit cards. How's that even possible? He has $1.7 million in credit, if I remember correctly, and it just shows you how the system is broken. This individual could do so to rack up millions of dollars of debt. Of course, that's not his purpose. He speaks about it, but it doesn't matter. It just shows you how the system is entirely broken. It's a system built upon debt, and you can engage in more and more debt, and the system rewards you for that. This goes on at the personal level, the national level, and beyond. If you found this video informative, please give me a thumbs up, and of course, you want to check out my book. This is where the best information is at. And if you want to flip through it, head over to Amazon. They have a look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.